India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. And I was just thinking, I'm not really sure what day it is. This Tuesday, right? Or
Tuesday, yes.
Is it Wednesday? Tuesday.
It's Tuesday,
Tuesday
yeah.
it is.
We wish it was Wednesday, but it's Tuesday. And I guess the bulls are also reeling under pressure, and they're probably losing count of the days as well, because the down days are far too many compared to the up days, and we had one of those yesterday as well.
Well, and I think it's been close to 3 weeks since three of us have anchored together. So let's hope we can bring some good cheer in the first week.
And let's hope all three of us are here in terms of, the set continues in that sense.
Back again.
Absolutely. Let's quickly run you through the cues as they stand right now as we begin this morning. US equities last night better and, higher. Nasdaq, of course, was the leader index there, 1.25% gain. But I want to make that point specifically because not that the entire market was up. Only 4 out of the 11 S&P sectors were higher. And you had about 54% of the S&P 500 constituents, 54% of the S&P stocks, which were actually down. The S&P 500 itself was higher, about 0.5% or so. But it was more mixed in terms of the overall underlying market breadth, etc. As I said, Nasdaq led the gains, and there the AI sort of super stocks, of course, were the ones which did the best. 3% gains on Nvidia. This is ahead of the CEO, Jensen Huang, who's set to deliver the keynote at the biggest sort of, tech AI event, the CES. And we'll hear from other industry leaders out of there as well. In terms of the progression for AI, investment going into AI, remember Christopher Wood making the point early this year, actually it was, I think, late last year, saying that one of the big risks is that investment into AI, which has been such a growth engine in the US, starts to taper off sometime during 2025. So we'll see. Dollar index, and here, of course, there was a fair bit of flip-flop, down 0.6%, 108.31 is where we left off. This index last evening, India time, was down about 1%, and then it recovered and ended about zero. I mean, it finally left off around NY close at down about 0.6%. So what happened is there was a Washington Post article which basically suggested that the tariffs which Mr. Trump, the incoming president, is going to impose are going to be on specific imports. It's not going to be wide-ranging across the board. Very soon after, and within the hour, we had Trump himself posting on the social media platform Truth Social, essentially pushing back against this Washington Post article in his typical style, saying, well, the article was sourced. He said these sources are all fake, and he said, well, tariffs are all really going to be out there, and there's no dilution, no watering down. And that's the reason why you had the dollar, which actually recovered a little bit from being down 1%. Came up almost about 0.5% or so from those levels. There was, of course, also the final services PMI for the month of December in the US, which was revised down to 56.8. But this was expected compared to 58.5. On the rate side, nothing very much. 1 basis point change on the 10-year. Oil was down about 0.4. So these are small changes. Now, just to sort of tie in the levels here, yesterday, once again, was a bit perplexing across the board, and people are still scratching their heads and wondering what happened for that 1.6% cut. So it's not showing through in the US. It did not show in this intensity across Asia yesterday. So what was the reason? I mean, if it was the virus, and I think we'll talk more about this as we go on, it should have showed up everywhere. It should have showed up in the US last night, and we would be waking up to it. But that was not the case. Probably the most the explanation which perhaps fits the price action is, of course, fears around growth and, of course, FII selling. The FII selling number is not that large contextually speaking. It's about 2,800, just under 3,000 crores or so yesterday. And compared to the fall, relatively speaking, it seems a little overdone in that sense. Now, but we have to, of course, face the price action and trade the price action. And here, 23,460 is the number on the downside. We left off at about 23,600. 23,460 is the recent low that we saw. And a break below it will confirm further downside levels. Nifty Bank, on the other hand, sort of closed decisively below the daily swing low. Here, it also, by the way, it also broke the November lows briefly, but managed slight close above it. Here, the level to break on the downside is 49,787, and a break of that will confirm further downside levels. And on the upside, I mean, for the Nifty Bank, it's the 40-hourly exponential, which is 50,883. So that is those are levels which we need to watch out for as we begin another session. I just want to make one point. I mean, if you remember back around September, if you look at India and India's weight in the MSCI index, MSCI Asia ex-Japan index, FIs were massively overweight even at the end of September. I mean, India's weight is just under 20%, and I think FIs at the end of September were about 17.5% or so, maybe a little more, but under 18%. Since September, I think FIs have sold another $25 billion. So we'll have to get those numbers, but I think the FI positioning now, as far as the market is concerned, should be at least at a decade, if not a decade and a half, kind of a low. So, at some point that will start to reverse because, frankly, just looking at what the historical weight has been and, where we are now, as I said, we'll update those numbers. This does seem a little overdone, but for now, at least on a day-on-day basis, as you track it, it is what it is, and it of course has looked a little shaky over the last couple of sessions. GIFT Nifty indicating about 1/3% higher start. It's about 90 points in the green. Surabhi.
Prashant, yeah, absolutely. You sometimes wonder what's the point of looking at global cues, considering what we're dealing with is just squarely an India problem. I mean, it's an India market falling on its own weight with the kind of FPI selling that we've had. But nonetheless, I was looking at these cues, and I was actually looking at the rebuttal that Donald Trump issued to this so-called Washington Post article. And the thing is that even when you read a Donald Trump quote, you can hear him say it out loud, right? So for the benefit of our viewers, I just want to read that, because the market got very excited and hopeful that maybe the actual tariffs won't bite as much as what the rhetoric has been. He's completely denied all that. He says, the story incorrectly states that my tariff policy would be pared back. That is wrong. The Washington Post knows it's wrong. It's just another example of fake news. So that's Donald Trump absolutely quashing any hopes that he will be a little more measured and a little more charitable in his tariff policy. Anyway, let's move on. Speaking of, the U.S., the economy is continuing to roar, especially on the manufacturing side, because we also had the composite PMI numbers come out of the U.S. yesterday, and they too were very, very strong, 55.4. So the expansion continues in December. The other thing is this tech rally that we saw on Wall Street. A lot of it was powered with what Foxconn said earlier in the day. The genesis was the quarterly report from Foxconn, where their revenues were up 15%, record numbers, and that powered tech stocks actually around the world, including, of course, Wall Street. And we saw what happened with NVIDIA and several others over there as well. A lot of technology news to track. Actually, speaking of tech, Mr. Satya Nadella himself is in India, and he's been meeting a lot of the dignitaries, including Prime Minister Modi. And he said, and the quote is up on your screens, that we are excited to build our commitment in making India AI first and work together on our continued expansion in the country to ensure every Indian benefits from this AI platform shift. Why am I, putting this on the table? Just because a lot of the product-specific companies in the listed arena, some of this tends to rub off. And anyway, we're moving into the IT earnings season as well, and IT is going to be a focus area for sure. On to Asia, markets are very mixed. The Japanese market has recovered from yesterday's deep slide. Japan's actually rallying very nicely this morning, 2.5% higher. But the Chinese markets are lower, and there's constant sort of geopolitical/tariff issues that are coming to the surface. The headline this morning is in the form of Tencent. Tencent shares are down, and why? Because the US has designated Tencent as a Chinese military company. So some of these skirmishes and issues between the US and China, they're daily headlines, and the markets are reacting to it. Coming to our session, so what did the Nifty do? It was an effortless slide below the 200 DMA, and that was the issue yesterday, the worry yesterday, that the bulls didn't even put up a fight. It was just a one-way decline. So that level has come and gone, and now we're tracking, of course, last week's low, which is around the zone of 23,460. So let's see if the bulls will have some respite, and if the bounces stop getting sold into. That is what was happening on Monday. Now to the numbers, like Prashant also pointed out, the FII selling number is not as bad as what we saw on Friday, but it's still selling off about 2,500 crores. But the bigger issue is, look at the domestic buying. The DII buying was almost to the effect of 5,750 crores. Despite that, the market fell so sharply. So we know that the panic or the issues now have spread to the retail side of the market as well. And that's showing up in the way the mid-caps are cracking. So these are some of the internals that we need to keep in mind. In terms of stock action, I'll just watch out for some of the PSU names from the oil and gas space, because BPCL has in fact confirmed that yes, it's looking at the IPO of Maharashtra Natural Gas, which is a city gas distribution company, largely has operations in Pune. And, this is a joint venture. It involves the companies like GAIL and IGL as well. So watch for a clutch of these stocks. Could be fairly interesting. Brokerages have started writing their notes on it. We'll tell you more about it as we go forward. But first, we need to deal with the market, Nigel, which has been under relentless pressure.
Well, the institutional number actually was baffling yesterday because you expected a large FI net sell number, which makes you to think that maybe there's a part of the domestic money that was in trouble yesterday. There was some pain that was seen. Yeah. And how much more is in the offing? That's the key, with regard to a bounce back that we'll see, because the majority of the pain played out yesterday with that part of retail capitulation that we saw, then we could see a bit of a bounce. Or is it a couple of days more? That's important. But three big observations with regard to yesterday's trading session. Yes, we did fall, but the fall was not on large volumes. And when, the fall is on lower volumes, then the drifts are large on both sides. And yesterday, the drift was on the downside. So that's point number one. Point number two, there was unwinding seen in futures. From the client side, both on index futures as well as on stock futures, and on the FI side, on stock futures itself. So there was unwinding of some long positions that we did see in yesterday's trading session, predominantly on the client side. And finally, the problem is the structure has got punctured, because both the Nifty and the Nifty Bank, both of them ended below the 200 DMA. And that's why you'll see that the structure, at least in the near term, has got punctured because of the kind of close that we saw yesterday. First, the point with regard to volumes. If you compare Monday's volumes with Friday's volumes, you'll see the FI gross participation actually was 14% lower in comparison to what we saw on Friday. Roughly, yesterday, the gross participation was around 22,000 crores odd, and Friday it was around 25,000 crores odd. The total traded volume, the value on the NSE was around 1.05 lakh crore, which is almost similar to what we saw on Friday. Basically, yesterday's fall didn't come on large volumes. Next up, what did the FIs do? Actually, they added some mild long positions in trade, and they covered some shorts in yesterday's trading session. But the point that I was making with regard to the FI positioning, yes, they're net short. 82% of their positions are on the short side. In absolute contract terms, it's around 2.2 lakh contracts odd. Not yet at extreme ends, but we'll require some good news for these shorts to actually go ahead and cover. The reason for the fall yesterday was some unwinding of long positions. So let's get straight to that. If you look at the client side, on stock futures, 10,000 contracts were unwound and some mild short positions were added. So longs getting unwound. Even on the FI side, they as well unwound some long positions on stock futures, and there were some shorts that was added. Don't have to take away from the fact that both of them, clients as well as FIs, on stock futures, overall they're net long. But yesterday, we did see some unwinding of those long positions and some minor shorts getting added out there. And those unwinding of long positions could have weighed on the market. Moving to the levels that we should be tracking. Well, there are two important levels. One is the 200 DMA, because that broke, and that broke decisively yesterday. So you'll get confidence once the Nifty can get past that up. A bounce is due today, and we're going to start off in the green, but you'll want to get past this particular level to feel good and feel that we have a couple of another 100 points odd. And on the downside, the recent low, which was last week, that's the important mark. So we start off in the green, but we need to build on from there, because yesterday it set some panic, particularly among the retail audience. The good news, though, is that yesterday's fall wasn't driven by institutional selling.
Absolutely. So let's see if the worst of this retail capitulation, the individual trading, retail and HNI, whether that is over and done or not. Let's kickstart then the conversation with the equity call of the morning. Vikas Jain of CLSA says the setup for the Indian equity market in 2025 suggests a fizzle more than fireworks, with its extended absolute and relative valuations, along with overvalued domestic bonds and currency. He says risks of EPS cuts if near-term growth recovery is delayed, and a strong capital raise pipeline may form headwinds, as foreign flows will hinge on the view on emerging markets after seeing trade restrictions imposed by the new Trump regime, and a clearer view on the efficacy of China's efforts to boost its economy. He says they favor staples, commodities, and mega caps.
All right, well, that's the view coming in. Let's